Okay. So today, well, first of all, welcome everybody. Thank you so much joining for us today about the our CRE commercial real estate webinar series. This one is going to be about mastering industrial properties. And my name is Deniz Senyurt. I'm a commercial real estate broker licensed in DC, Maryland, Virginia. And I have also Paul here in our group. He's going to talk about the finances. Let me start the presentation. And let's see right here. Okay. Okay. So do it this way. So do you guys see my screen? The presentation screen? Yes, no?
Yes, we can see. We saw it for a second and now it's gone.
Okay, let me do it again then. Okay. How about now?
Yes.
Okay, perfect. So today we are going to talk about industrial properties only. I'm going to share key real estate market insights. Paul is going to talk about the financing strategies for buyers and tenants. And then the topics we are going to cover is key real estate market insights, questions to be asked while leasing or purchasing an industrial property. Paul is going to talk about the financing strategies and how to financially prepare for purchase of a commercial property. And okay, let's start with the key real estate market insights first. So for the purpose of this presentation, I'm going to concentrate on the Washington, D.C. metro industrial properties. And so, Paul, if you see someone coming in the group, let me know. I'll invite them, or maybe I can make you the host so you can accept them. Okay.
You should be able to make me the co-host because right now I can't see them, Denise.
Okay, no. Can you do co-host? Okay, I'll do the. I'm making you the host. Okay.
Yep.
Okay, now. You need to let me share my screen. Basically, kick myself out.
Okay, let me switch that back. You have to be, I guess there's no co-host on this version. So I made you the host and.
Yeah, you're the host now. So for the purpose of this presentation, we are going to talk about the Washington, D.C. metro area. So this map shows you where it is covered. It's not just the D.C. market, like central. We also cover the Maryland and also the Northern Virginia area, okay? So next, these are the key numbers. So for instance, Washington, D.C. area, we have $68.8 billion worth industrial asset in our market in Washington, D.C. metro. Inventory is 299 million square feet. We have under construction 10.3 million. It went down a little bit lately. 12-month net absorption is 1.6 million square feet. It is positive. That means we are consuming leasing more than what we produce. And then vacancy rate is 5.1%. It is slightly increasing, but compared to office buildings, definitely this is nowhere like it's really still good. Market asking rent is $16.73 per square feet. It's keep increasing. Growth is 6.1% escalation. Market sales price on average $223 per square feet, and it keeps increasing. 12-month sales volume 1.3 billion, and it slightly dropped due to the interest rate hikes. So this is Washington, D.C. metro area. I believe most of us here are in the Northern Virginia area. So this is Dallas North. We have a better market. So rents is $17.76 per square feet. Prices are higher, and the vacancy rates is lower. Again, Dallas South is rent is higher, and then market rent growth is 5.1. Price is a little bit lower. When I say South, it means like Manassas and the Chantilly area. This one is more Sterling and up. Okay. So this chart shows us the trend. For instance, this yellow line is the United States vacancy in industrial properties. This green line shows us the vacancy in our market. As you see, we have a lower vacancy. During the COVID period, we had the lowest vacancy. In fact, we have like a negative. We had more demand than property available. It slightly started changing. We started having vacancies in our market, but it's still good. And next, here you're seeing the market asking rent growth. As you see, it jumped because we had no vacancy at all. We had more demand for industrial properties. And the reason is that, as you see, logistics getting the highest rent growth. The reason is that all those small shops, retail spaces has closed, as you know, most of them. A lot of businesses moved to online. So what they do, they don't have retail space to store those products. They keep warehouses. For instance, when you order something from Amazon, it's coming in a day. So they are coming from those warehouses around us. So we don't have enough of warehouses in our market. We keep building them, but that's still not enough. So industrial properties are hot commodities. They quickly sell and quickly lease. For instance, United States rate for the rent per square feet is around like a $10 per square feet, $12 per square feet. In our market, it is like a 16, 17. In fact, I have listings $22, and I got like 8 offers within a month. And then this one, sales volume per square feet price is also increased. For instance, this is green line shows the US prices. They are around $150 per square feet. In our market, it is on average $220. And here is the market cap rate. During the COVID period, we had the lowest cap rate. Properties were selling at like 4%, 5%, 6% rate. Now it's jumping up to, it has jumped to 7.2 in US, and in our market, it is more like 6.8%. Of course, this goes aligned with the interest rates. People, when they're borrowing, Paul asks them pay 7% interest rate. Buyer has to come back and say, hey, I need that kind of return from this property. And the key factors to evaluate an industrial property for purchase or lease. So let's say you decide to lease or purchase an industrial property. What would you ask about it, right? How do you evaluate this property? So there are a couple things. First, what are the types of industrial properties? You need to understand the types, the terminology for it. Flex space, for instance, I have a listing in Sterling, 20,000 square feet space. It is a flex space. You know why? Because you can use it for some kind of a retail, and also it has AC, it has offices in it. So we call it as it's a combination of warehouse and an office and retail. So we call it as a flex space. I have another one, another listing in Chantilly. It is a auto-related I-5 zoning industrial warehouse. It is literally warehouse, industrial building. And then, so this is actual industrial building. This one also, but this is 100%. And this is a data center. You know, the Loudon, Sterling, nowadays in Bristol, we see more data centers. So it looks like this, very clean looking. A lot of people complain that there are noise coming around it. People complain that they don't produce any jobs, but they take a lot of space and they consume energy. And this one, a cold storage for like food products to be kept in a cold environment. We need more of these. Heavy manufacturing is another thing. And truck terminals, for instance, all those products coming in with the trucks, they go into one place and then they just transfer to another truck and then ship out. So that's kind of places we call it truck terminal. Of course, there are some R&D warehouse businesses, buildings, light manufacturing, and distribution centers. Those are some alternatives. Here is demographics. Also, it's very important. You will like to look at the demographics of the property. So, for instance, what's the total population? This is actually true for any kind of commercial real estate. So when you are purchasing something or leasing something, you need to understand if that population actually fits with your clientele. So if the income is good, sometimes your targeted client are low income population, then you want to look for that. If you have a daycare, for instance, you want to look for little kids, how many of them, like what's the population of the certain age group of people. So depending on your targeted clientele, you want to target that demographic environment. So we have the tools to provide that data. Location is very, very important because you can change the location of the property, right? You can change everything. You can knock it down and build a new property, but you cannot change the location. So you better choose the location correctly. So for instance, I have this listing in Sterling Industrial Warehouse Flex Space. It is at a really good location, right next to Toll Road, easy access. It's also right next to Dallas Airport, very easy access in and out. Route 7 is right there. If you want to go to through the I-66, that's also right here. It is directly connected to this Washington, D.C. So if you want to be in an area where you can reach the Leesburg, Ashburn, all those areas, or to D.C., this property serves that. So again, this is a distribution center. If this is a distribution center, this is a great location for them. So visibility, signage, visibility, and traffic is very important. You bought a property or rented a property, and you're gonna put a sign out there, right? You want to make sure that your sign is seen. So some businesses, they don't like to be that visible. That's fine. Then they want to be behind the building, or they don't care about the signage. They can go cheaper buildings. But for retail buildings or any kind of consumer related buildings, if you want a signage, you want to be on the road, that's signage, your sign is seen. For instance, this property is right here on Old Ox Road. It has 27,000 vehicles passing by every day. So that means every day people are going to see your property business sign on that road. So this is really valuable. Accessibility. So you would like to make sure that the accessibility is is very important. Let's say you have a business and you need to have those 18-wheeler trucks come in and offload their the products. So if the parking lot is not allowing you to do that, then you have a problem. So before you rent or purchase a property, you will like to look what kind of trucks or cars are going to come in. Even for your clients, you want to make sure that they can have easy access in and out of that property. It really makes it very valuable because people who has difficult time accessing, they got frustrated and they won't come to the property and the business. Door types are also important. Another thing you need to pay attention. Industrial properties, we have 3 types of doors. Overhead doors, which has higher height, and then roll-up doors. This is drive-in roll-up doors, and there is a loading dock. For instance, 18-wheeler truck comes in. They have a raised height, right? They can't unless there is a ramp, they can't load it through the those doors. They need a loading dock. So depending on the use on the products shipment, you need to choose the type of the door. And the parking lot, of course, extremely important. You want to make sure you have enough parking for your business, for your employees, and for your clients. And handicap parking is also important. Do you have one close to your door? Is it easily accessible? Especially if it's a medical building, you want to make sure you have the handicap parking. Bays and number of bays and sizes. For instance, this property is another listing of mine, 4399 Hanninger Court, Chantilly. We have 8 bays. So each of those areas, for instance, this one is a bay, okay? This one is a bay. So this area is a bay. So each one of those, like with the door, each one is bay. And each bay in this property is 2,500 square feet. So you need to understand how many bays and what's the size of it, because it defines the amount, like size you can occupy. It's not easy to open the bays in between, but it's doable. But if it is already done, you need to make sure that fits with your requirement. So gas heater, HVAC, water heater. Gas heater, a lot of industrial properties comes with gas heater, but HVAC and water heater are exception. So we call them, if there is no HVAC, we call it cold shell. If we have HVAC in it, like a heater, cooler, then we call it warm shell. And then with the water heater, again, it's an exception. You might have it or not, but these two are exception in industrial properties. And it makes it more valuable if you have it. So this one, ceiling height and column span, is also very important. Ceiling height, meaning that for instance, I have a listing is 28 feet. Older buildings are 10 feet, 18 feet, like they get lower. But lately, the property owners, they try to build as high as possible. The reason is that with the new technology, business owners, they stack the products on top of each other. And then that gives them use the space more efficiently. So you need to check, for instance, that the property I had in Sterling, they want to do volleyball group, paddleboard, or basketball. So what you need, at least 28 feet ceiling height, right? So that's a special ceiling height. And you need to know what's the ceiling height, and then you search for that type of property. In our market, with those new warehouses, we see them in Chantilly, Sterling, Dallas airport area. They come usually 28 and up. If you go towards Alexandria, Lorton area, their ceiling heights mostly lower. Column span is the distance between those two columns. So that also important, because if you have certain type of product or machinery, you like to make sure that they can go around between those columns. So if it's too tight, it will limit your business. Next, offices and restrooms. So the offices and restrooms are not standard in industrial properties. They might, especially not this fancy. We sometimes, landlord adds some office space, some little office or front desk and a restroom, but they usually are exception. So power is also very important, and depending on the business type, you would like to make sure that the electric power offered in the unit matches with your requirement. If the power can range from 220 to 240 volt, and then it can also go up to like 440, 880. More you can add to it, but you need to understand your machinery, the machinery you're gonna use, what type of power they need, and if you need more power, make sure that you can add it if it's not there. So those are important. Fire sprinkler system. You're gonna store a lot of products in that warehouse, so you like to have a good fire sprinkler system that comes off and then extinguishes the fire. And then this one, roof is also important. What type of roof you have? Is it tilted? Is it flat? What kind of, for instance, this one is metal. The other one is asphalt, I believe. So you need to check which one is better. For instance, this one can be easily accessible, but if too much snow, if the place where it is in gets more snow, then that could be difficult. In those situations, you want to use this one, tilted roof. And the other thing is both HVAC and the roof and other things, you need to understand before signing any paper, you need to understand who is responsible for what, especially for leases. Landlord will love to have you responsible for everything, but you want to make sure before you sign anything, make sure that they are in good shape. If not, make sure that you take the responsibility after they are renewed, because they are expensive. Floor loading capacity is also important. So if you have heavy machinery, heavy equipment, heavy products, the floor loading capacity of this concrete slab is important, because otherwise it will crack. So you want to check that out if that's important. Environmental inspection. Paul will tell you this is extremely important. The reason is that when you purchase the property, you need to do an environmental inspection. A lot of buyers tell me like, oh, I don't need it. It's fine. I don't need to spend $1,000. That's fine. I said, well, okay. You don't want to spend $1,000, but if this property was polluted and let's say there was an auto-related use, there was some gas, like a oil spill on the ground, then after the purchase, you'll be the one responsible. Even for the leasing, I've seen companies do the phase 1, phase 2 inspection before they sign a lease because they don't want to be blamed for the environmental pollution, contamination. It was done before. Okay. So zoning is really important. So you are signing. Yesterday I was having a conversation with this other agent. She's a residential apparently. She has no clue what the zoning means. She keep telling me like, oh, my client is good, you know, it's a perfect fit, blah, blah, blah. And I said, what type of use they need? Well, it's a restaurant. Well, why are you trying to get into industrial warehouse? Well, the size fits. Well, the zoning doesn't fit. Because if, for instance, M1 is a different zoning, manufacturing, M2 is a different zoning, MT is for instance, is a transportation. Each one of them are different and they change depending on the counter requirements. So before you sign anything to lease, to purchase, you like to make sure that the zoning fits with your business. Otherwise, you'll end up with a lease or you end up with a property that doesn't fit with your business and you can't use it for it. And there will be a lot of financial implications for it. So that's the general summary of the industrial properties. I will leave the floor to Paul, and he will talk about how to get those properties.
Perfect.
Before I
Thank
do
you,
that, do
Deniz.
we have any questions? Do you guys have any questions for me?
No, Denise, this is very, very helpful. Thank you. I
Okay.
really enjoyed all of it, and really, thank you.
You're welcome. So I am turning my camera, Paul. It's all yours.
Perfect. If you can just enable me as host now, I'll take over and I can share my screen.
Yes.
It's still saying it's disabled by the host.
I'm sure. Let me multiple parts. Okay, you can do it now.
All right. There we go. All righty. Everybody should be able to see my screen, hopefully. I always like to start off with just kind of a general overview. That way, you know, for those I haven't met with, or who are going to watch the recording afterwards, they have an idea of my background. So I'm a commercial lender with Atlantic Union Bank. Specifically, my background, I have a bachelor's of science in economics and business administration from Washington Lee, and then got an MBA from the University of Richmond's Robbins School of Business. The picture in the bottom right, I have gone through the Virginia Banker School program. It's specifically a program that essentially teaches management as well as pieces of lending, and is a banker certificate through the Darden School. I do a lot of network in the area. There's a lot of great organizations, Marima, which is terrific. If you're trying to find a commercial realtor, obviously Deniz is a member of that. She was president a year ago, and she's a big supporter of that group as well as I am. And then the Tower Club, for people who are looking for connections within the government contracting space and some private sector, I'm a member. And then 1 Million Cups, I'm a member of the Fairfax and Manassas chapters. They're a great area to look for startup opportunities. And I have had those involved looking for industrial space to own or occupy who are at those organizations. Some are also looking to sell existing businesses. And there's advice that I've been able to provide for both sellers of businesses and on the purchasers. The bottom left is just a fun picture. My claim to fame is I was on the cover of Washingtonian magazine because of that Chihuahua. I'm a big supporter of the Rural Humane Dog Rescue in the area. They do a lot of great work with dogs and making sure they find homes. My Chihuahua is 4 years old, and he came in 3rd place 2 years in a row in that organization and got me on Washingtonian. So the big question is, what does Paul do? I like to start with a story, and then we'll dive into some actual numbers and specifics. This is a client, Heba Health. I have been working with them for the past 6 years. When I originally met with the owner, he was a manager of Heba Health and was trying to get financing. He had gone to a big box store bank that he had a personal relationship with. The commercial lender said they could get an SBA loan for the practice acquisition, and that never happened. Unfortunately, the lender left. They lost his files. I got connected by his CPA with the owner, and originally he wanted to buy the space and the practice. It's a flex space and warehouse space. There's 2 different units. But at that time, we wanted him to get into the business, and down the road would be working on a purchase. We were able to help through the Small Business Administration acquire the business from the original owner. He was in the business for 2 years, and then we did a traditional loan. We didn't need SBA financing to purchase both the units for him. He now is secure in knowing that if ever, if there were a lease issue or things of that nature, he doesn't have to move, and he's building equity as opposed to leasing. That's just one example of how I help clients. And I'm going to dive into where I'm typically working and where the bank is working. Specifically, I focus on Virginia, Maryland, DC, and North Carolina. Baltimore to Richmond is my preferred area, but I can work outside of those territories. But in Virginia, DC, and Maryland, you really don't need to go far. Virginia especially is always ranked very highly in terms of attractive areas, both based on household income, GDP growth, Fortune 500 companies. We're very blessed to have a lot of companies in this area who are doing business, and that's growing, especially of late. We've seen a number of large corporations move to this area. That makes it a profitable area to do business and invest. Atlantic Union Bank, we're the largest bank headquartered in Virginia. The Truist, Wells Fargo, Bank of America, they have a presence here, certainly, but they are not headquartered. But even with competing against those groups, we are now the top 4th ranked bank in Virginia. The pro forma you'll see on this slide, we actually acquired a bank that closed at the beginning of this month. And all those numbers in blue are where we are now. The numbers in green were where we were prior. We're a $24 billion bank, headquartered out of Richmond. If you look in the areas that we serve, the Piedmont area, Lynchburg, Roanoke, Danville, we go all up and down, and especially the 95, 64, and 81 corridors. There's a lot of commerce there, and as Deniz was talking about, traffic is key. If we've got the infrastructure, we have roadways, we have internet supply, we have utilities. People want to do business where they have Wi-Fi. If you don't have it, it makes it very difficult to start a new business. I threw this in here just to set the stage. There's a lot happening in commercial real estate. The data on the left, I pulled directly from the St. Louis Fed. They call it the Fred system. And it shows, what are banks lending? Are they lending? Specifically in the commercial real estate sector. Again, this doesn't include non-farms and residences, but specifically for commercial. And this would include office, mixed use, warehouse, flex space. There has been a tightening. It's starting to ease a little bit, but a lot of that, I would say, is due to office. The other issue that I'm seeing in the warehouse sector is interest rates are high. It's making it very difficult for some borrowers who before were maybe borderline to afford these properties, and prices have gone up. With inflation, the value of everything has gone up. It mirrors in some ways the residential markets. With the only area that we haven't seen those values increasing, we've actually seen the opposite, is office. The note I make on the right is the Board of Governors for the Fed has actually stopped a survey that they had on businesses and what they call the ease of access to lending. It used to be a metric I would look at. They've stopped doing that. And some of it is I don't think they like the numbers, to be honest. Unfortunately, a lot of banks have struggle to make loans, my goal is to share some insight on how you can avoid that trap. How I work with my clients and how you can make sure you have funding secured before you put in an LOI or a purchase agreement with Deniz. The state of commercial lending, as I mentioned, there are loans available. SBA is always available. That is a tool, both the 7A and the 504 can be utilized for commercial real estate. I'm going to talk through the pros and cons of those versus a traditional loan. And all I mean by a traditional loan is one that the bank does not need federal subsidies from. The SBA, Small Business Administration, are typically a partnership, and Atlantic Union Bank is a preferred lender by the SBA. So that means we can do the 7A in-house, whereas other lenders might have to go outside. I also am seeing a lot of credit card debt increases. That's just across the board, both on the personal side and on the commercial. And I mentioned personal, for the vast majority of the clients I am working with, the bank is requiring a personal guarantee. Until you're a Fortune 500, CEO running a company, until you take your company public, odds are there's going to need to be a personal guarantee. And we as a bank will look at both the personal consumer side, deposits, your W-2 from outside income, your equity in a home or your savings, as well as how the business is doing. So it's not just we're only looking at the commercial side. I will preface that we care first and foremost about, is this a profitable business? Whether it's a real estate holding company, do those leases cover the mortgage, or an owner-occupied purchase for warehouse space. And again, I broke out office because office is the trend, going against many of the trends you're going to see. It's certainly not what you're going to see with warehouse, but the interest rates and rents just aren't there. Unfortunately, a lot of the owners of commercial office are impacting a lot of the numbers you're seeing quoted. Oh, commercial is struggling. Oh, there's a slowdown. You can't find buyers. That's what's in the headlines. If you dive into it, warehouse is still a very hot commodity, as Deniz has been talking about. And it's still extremely competitive. So make sure if you're seeing headlines, if you're not diving into the data they're pulling, look to see if office is included in that, because that will buck most of the trends you are seeing at this time, both with appraisals, rents, and just renewals of loans. How to get started. I talk about this, I say investing, but this can be for owner-occupied or someone who's looking to purchase commercial warehouse for themselves and their business. You need to dive into the industry. You need to work with someone like Deniz who knows this industry and can talk about the pros and cons of what's the difference between warehouse A and warehouse B. Why is the purchase price different? I highly recommend, and one-on-one, I'm happy to develop a methodology. I'm going to share some of the bank's methodology because we view it as we're partnering with you on any deal we finance, even when it's SBA. There's sometimes a misinformation out there that, oh, banks don't care with the SBA deals. They aren't holding that in their books. We do care. You get a reputation in banking based on how your loans performed, and we want to make sure we're helping people, and we want to make sure it's a long-term relationship. Me financing through the SBA a purchase is not going to help anyone if it goes belly up a month or a year later. We want a long-term relationship with our investors and with our business owners. But there are lots of opportunities for investment. So whether you pull out the old Excel sheet and you do your own cash flow, or we talk through as a one-on-one partner, what am I seeing with this deal? What are the pros of this? What are the cons? Is this going to stress your personal cash flow? And now you can't go on that vacation later this year or save for a college fund? Or is this going to help add to your savings down the road and is really a value add for your personal and business growth? I have different areas I look at. There are timing constraints with certain deals. Some of my clients, especially if they are owner-occupiers, they have a lease that is going to mature. They have to either renew that lease or take advantage of purchasing a property in that time frame. There are liquidity constraints as well. The deposits you have in the bank dictate how much you will have available for purchase. There are ways to change that factor. Maybe you bring on a partner. Maybe instead of purchasing one large property where we might not want all your eggs in one basket, you look at multiple smaller properties, if that makes sense for the business you're trying to run or the investment strategy that you have. And then lifestyle. I have a lot of clients that, they'll go on seminars and they hear how easy it is to purchase these properties and just rake in the money. Well, what happens if you have a bad tenant? Are you going to manage that property or are you going to pay someone? What happens if there's depreciation that you've been able to take advantage of, but now you have a roof? Who is paying for that? Does your contract say you're responsible, or does your contract say the tenant's responsible? What level of involvement do you want? Are you buying this property here in Virginia and retiring to Florida? That's all going to impact our financing and the discussion we would have. And then finally, how does this investment impact the rest of your investments? Just like as if you were investing in stocks and a financial advisor would talk, do you want all your eggs in one basket? What is your risk tolerance? Are you not going to be able to sleep at night because of how close you've brought the debt service coverage ratio? And that, for those who don't know, that just means dollars you're bringing in on an investment or as a business owner and dollars going out. Do you have a backup savings account? Do you have, a partner who can inject more capital in if things don't go exactly according to plan? The goal is to control as much as you can, and I'm going to talk through how you do that. But there are always going to be unforeseeables. No one saw the impact to office that COVID was going to have. One of the largest holders of office are pension funds. It was a investment grade investment at the time. People are looking at that now. It has changed how we look at that. The same thing with warehouse. Warehouse was a little sluggish before. Now I have clients going out to Winchester, even though their business is in DC, because they can't find the square footage they need. They can't find the ceiling heights they need to operate and grow their business. What paths do I typically see? How do people get to buying a warehouse? I work with clients who they started with single family residences. They built an investment portfolio on the residential side. They grew that. I've seen people who've gone into multifamily and they're doing 1031 exchanges, which is taking advantage of the tax code to avoid that capital gains tax. I have investors and owners who they've been leasing office or they've been leasing warehouse and now they're ready to buy. Or they've held all their commercial properties and they want to exit. I'm seeing some people who held office who are moving into the warehouse space and flex space because there's a demand and the rents are strong. And then as well, raw land. I have a number of business owners and investors who are pursuing opportunities to develop land. They're working at the county level to get areas rezoned in an attempt to build more warehouse and flex space. A lot of these counties, as a side note, they are more focused on residential than warehouse. They want retail, high density residential. The further you get away from the DMV and some of these more metropolitan areas, the more open they are to that rezoning. And I have a client right now who is going through a rezoning process in Rockville, Maryland, and it has been difficult. Falls Church and Fairfax City are also areas where it just takes time. It can be done, but through personal experience, I've had clients who have had difficulty with that rezoning. So there's different levels of risk in terms of how those clients are approaching investment in warehouse space, flex space, but in any space. I threw a lot on here because it is overwhelming. There are a lot of different people you can turn to who offer financing. I commonly have, as Deniz mentioned, with people going to residential realtors, I commonly have clients, they go to the person who helped them buy their first house for a warehouse. They cannot help you most of the time. Most of them, they offer a single product through Fannie and Freddie for residential. They can typically go up to 3-unit condos and townhomes, but after that, they can't offer those. Similar, there are alternative lenders. Not every deal is going to fit a bank. There are regulations that we have in place, and there's a certain amount of risk we want and the government wants us to have. So I do work with other alternative lenders who can come up with sometimes short-term solutions. Maybe you find a warehouse that's vacant and you need to do some rehab. Maybe you need money to turn that around, and then you can come to a traditional banker like myself. I'm happy to think outside the box, but one of those ways is connecting you with good people who have alternative solutions. The one that people typically don't want to go to, but I always recommend, dip into your savings funds. There are programs like the Rob's 401k or a self-directed. You need to talk with a tax accountant about those, but you can inject money with the Rob's as a business owner and use that for purchasing your warehouse. It has to be an actively owner-occupied business. The self-directed you can use on investment purpose warehouse. So there are different uses of the tax code. So you're going to need to talk with that accountant about that. But I have worked with clients who have used those processes, as well as the 1031 exchange and private money. I throw this up on here. You're going to hear bankers talk about the 5 C's of credit. I'm not going to go through each one, but character, capacity, capital, collateral, and conditions. All that means is the bank is going to look at this deal from different perspectives. We're going to look at what's your history. I mentioned a lot of my clients invest in residential property. That can be a source of proving to a bank that you can manage multiple projects as an investor. And that might be a good basis to then dive into warehouse or flex space. The capacity all comes down to, do you have money in the bank account for the down payment? We can talk through other areas of that. Is there outside income we can include? As well as capital. You may be borrowing money for part of your down payment. How does that impact a traditional lender like myself? Or if we're doing an SBA deal, there are specific requirements when anything's federally backed through the SBA of where that money came from. There are seasoning periods for that money, things of that nature. The type of collateral. I am seeing a lot of business owners trying to get creative, as I mentioned. If they're buying a raw land at first and they're going to develop and they're going to build on that property, terrific. We're happy to help. But they need to be aware that's going to be a different loan structure than if you already have a built, tried and proven building with a tenant in there. And then again, conditions. If we're talking office right now, a lot of banks are putting additional conditions on renewals and new office if they're open to it. The economy may impact your buying power. Our price is higher now than before. Our rents where they should be now compared to where they were before. And again, someone like Deniz can walk you through where those rents are. What are the averages she's seeing based on location? Documents to expect. And I want to be conscious of time. Deniz, are we still good on time?
Yeah, they're good.
Perfect. These are some of the documents that routinely come up for my clients who are looking at warehouse. Tax returns. What's your 9-to-5 job? If you're an investor, we want to know what's the outside income that if a tenant were to move out, you would be able to support this loan for a period of a month or two. Profit and losses. If you're operating your own business and you're taking over a warehouse space, we want to see how your business is doing. We're about to be at the end of June going into July. We're expecting January to April, January to May, profit and losses and balance sheets for owner-occupied deals. Personal financial statement on the owners. Again, that goes to character. It also goes to liquidity. Do you have the funds available for this purchase? What is your personal background? A debt schedule for the business. If this is your second or third investment, we want to know what other debts are out there when we're calculating our debt service coverage ratio. Operating agreement. are you 100% owner, or is someone else coming in as a partner? If they're coming in as a partner, will they be a guarantor? And why aren't they a guarantor? No one typically wants to be a guarantor personally, but from the bank's perspective, if you're hesitant about the project, we probably should be also. We can talk through that, and it's not always 100%. There are different levels of guarantees you can have depending on experience, deal size, all of those pieces. The other I put in here, and it applies both to owner-occupied and to investors. If you're an investor looking at warehouse, is there a lease in place? When does it mature? As a bank, we want to mirror that lease. If you have a 5-year lease with no renewals, we're probably not going to offer more than 5 years as a term on that. We'll do an amortization out longer, but you're probably going to have a balloon. If you have a large, stable corporate client in there with a 10-year, 15-year, maybe 25-year lease, we might be open to a longer term on the bank side. We want to mirror that risk because there is risk at any renewal. Same thing on the owner-occupied side. If you're going to occupy this building and you're currently leasing, when does your lease mature? If you are renting a space and you want to buy, we can count back in that rent if it's within 6 months of that expiration date. If it's greater than 6 months, you're on a cash flow basis, you're going to get penalized both for your current lease and the new purchase loan. So just things to consider. And I always tell my clients, show me the documents and let's talk through it. Worst case, we work on a pre-approval, and then when we're within 6 months, then you can start really going out and looking at buildings with Deniz, whereas maybe she's just showing you properties and what's out there in a general sense until you're ready. It saves you time and saves her time. Bank statement, I can't tell you how many clients I've talked with, they say, oh, I have X, Y, and Z in the bank. And we get there and we pull the statements and, why isn't it there? And unfortunately, they're waiting on it from a friend, or they're waiting for another loan to come through to put that in. So a banker is going to ask you for that money. They're doing you a disservice as the investor or business owner if they are not asking for that. And if there are funds coming, that's fine, but we need to make sure we know as a bank, is this, do we know the money's in the bank, or is it coming? And that's maybe a risk we need to take into account when you're signing leases, when you're signing letters of intent. And then finally, one thing that always comes up, do I need to provide my holding company? I haven't set it up yet. My advice to clients is get your purchase agreement. Once you have a solid purchase agreement, then start working with an attorney. I recommend an attorney as opposed to some of the online groups where you plug and play for that holding company. But you don't need it beforehand. You're welcome to, but I don't require it until there's an actual purchase agreement and we know we're going forward. The final slide I put on here, who is in your corner? You need a banker, some financier, regardless of whether a traditional banker, a hard money lender, a private lender, or a family member who can bankroll this project. You need a commercial realtor who knows the deals. Every area is different. If you just go on LoopNet or on Crexy and search, you're looking at the same thing everyone else and their cousin is looking at. A commercial realtor will have pocket deals that they know, this person doesn't have this listed, but if we were to ask, they'd be open to an offer. That's the value that someone like Deniz has, and we worked together on it before, has been able to offer to her clients, and it helps my clients as well. Are you going to need to make improvements on the building? I have a warehouse in Warrenton right now I'm working on. There's the HVAC's ready to go any year now, and they are building that into their negotiations. They also know another client who's an investor, they are moving to Florida. I mentioned that before. They need a property manager local who can deal with the client if there are issues, who can arrange these other providers, a landscaper, all those types of pieces that need to go into it. Appraisers, environmental inspectors. I highly encourage you, lean on your commercial realtor. Deniz, especially knows everyone in the DMV. She will have great recommendations that you can pick from, and then find the one that fits your personality. You need to make sure they fit within your business plan. that is all I have on my end. I'm certainly, Denise and I are both open to questions. That QR code is for my LinkedIn. If anyone wants to connect on LinkedIn, you're welcome to just put your phone up and snap that. It has my cell phone on there. And I appreciate everyone's time for coming out. I know it's a lunchtime on a Tuesday, so appreciate that.
Thank you.
Okay. Thank you. So, Paul, isn't it crazy when I ask people, say, what's your budget? How much money you have? They say, oh, don't worry about it. The moment they say don't worry about it, I start worrying about it. Because that means that's shaky. So
you should want, as the investor or business owner, to know you have financing lined up. The perfect situation is, regardless of whether it's with myself, with another banker, you have that financing secured. Typically in commercial, unlike with residential, you won't get a pre-approval. It'll be what's called a pre-qualification or a term sheet. You want to know that someone's at least given a cursory review of your file and you're ready to move forward.
Yeah.
That doesn't mean you can go out and buy a $2 million property if you're only pre-qualified for $1.5 million, but it gives you somewhere to start. Every property in commercial is different. The leases are different. The square footage is different. The location is different. In residential, the residential lenders don't view it that way. A house is a house most of the time.
Yeah.
If a tenant moves out, you'll find another tenant at this going market rate. That's how they underwrite it. It is different, especially with commercial, any type of property, but especially warehouse.
So also, I got worried when people bring, like I do most of the time work on the listing side. When people bring an offer with a lender out of state, I am like, nope, we're not accepting that offer because a lot of deals fell through. I like people who has relationship with the bank. That tells me a bigger like a bigger story than just, hey, I got this paper, but I don't know the banker. So because then I expect some problems down the road, if that's the case. So Joelle in our group here, Paul and I, we worked together on a deal actually. And Joelle, do you have any questions or you want to chime in? Is she still there?
Can you hear me?
Yes.
Yeah, I'm sorry I was late because I had a doctor appointment and the one of the doctor fellow died. They delayed 1 hour, so I was late.
That's okay, no problem.
So I'm sorry I haven't heard all of the conversation. When I came in, it was 12:15. So I heard part of the conversation from Paul. I missed the most of it. Sorry about that.
Yeah, Paul started when you joined, just Paul started. So you just missed my presentation.
Oh, okay.
I'll send you the material.
Yeah, thank you. It's really helpful. I like those this event.
And we'll also be doing coffee tomorrow. I know, Denise, if you wanted to talk about that, if anybody wants to come out, we'd love to chat in person also.
Tomorrow, East West Cafe on Tyson's Corner. I'm gonna send you the address of it. Paul and I, we are meeting for a coffee.
Okay.
What time we are meeting? I think 9:30. So I'll send you the timing. So if you guys want to come and join us, have coffee, some breakfast with us, come over.
Yeah, yes. Sounds good.
Yeah.
I would love to.
Yeah, this is for everybody, by the way. It's not like for Joelle. We love to see you, Joelle, but I just want to invite the others to Anna and Raven.
We'll try our best. I know Anna's gonna go to office in person tomorrow, and then we'll see how we can do it. But no, but thank you for the seminar. It was really, really informative. I mean, tons of information, so really appreciate it. Thank you.
So Raven, I think it is good that Joelle was just like you when we start working with her.
Right.
We worked with her that was her first time commercial real estate purchase. She's a big investor in residential and also businesses, but I believe she hadn't done commercial before.
Okay.
So we walked through her on every step of the way, but it requires attention to detail and listening to our advice, paying attention to what we say, because we have done this so many times. And then we will walk you through all those steps to get there. Okay,
Sure. Thank you.
you're welcome. So,
I'll try my best to get there tomorrow morning, but let you know.
I mean, if you can, otherwise Paul and I, and maybe Joel, will be joining us, maybe Anna. We'll see. So Paul, if that's okay with you, I'm gonna finish this, and thank you all for coming. And next month we'll do something else. Maybe we'll talk about leases, how to structure the leases, maybe like a financing for the lease improvements. I also plan to do medical investment properties. We'll think of something interesting. If you want to learn something you don't know, just let us know. We'll put together something.
Sure, it sounds great. I actually very interested in the leasing part. Learn some knowledge. I appreciate it. We have those opportunities.
Sure. Paul and I will put together something for leasing, how to structure a lease from the landlord point of view, from the tenant point of view, and maybe I can go a little bit more detail, because you don't know who will join the call. We try to keep it simple, but experienced own landlord like yourself, we can do something more detailed and talk you through the system, and maybe there are some financing options for the lease improvements also, right? Paul, you guys do some tenant improvement financing also? Yeah.
We
Okay.
do. There's a couple different.
We'll put together something for you. Just
Okay,
for
great.
you, Joel.
Thank you.
specifically.
Great.
Nice talking to you guys.
It's a perfect time for me to learn.
Awesome. You're a big learner. I love it.
Oh, thank you. I try.
Yeah, stay in touch. We'll talk to you later.
Okay.
If you can, come over tomorrow for coffee.
Yeah, send me the information. I will come
I'll do.
tomorrow. Yeah.
Okay.
Looking forward to see you.
Bye-bye.
Thank you, Paul. Bye-bye.
Absolutely. Bye. Take care, everyone.
Thanks.
Bye. Thank you so much.
Bye-bye.
Bye.